Let's talk about insurance. Actually, let's talk about life insurance and why using life insurance as an investment vehicle is bad. Not just bad, it's actually dangerous for the investor as well as the economy in general. So, first of all, there are two kinds of life insurance. First is term life insurance, which is pure play insurance, which uh, which does not have an investment component, so it is not used as an investment component. Not used as an investment vehicle. The other life insurance type is called endowment based policy, which is uh, also known as cash value policy, or a policy which has a cash value. So basically, these kinds of policies are used as an investment vehicle, and you'll understand in a short while. In term life insurance, what happens is you have a certain amount of sum assured on your death. So let's say it is $1 million. Now you have to pay a monthly or yearly premium on it. And after the term is over, let's say the term was for 10 years. So for the 10 years, you have to pay monthly or yearly premium for the insurance to stay active. And this is the term when, if something happens to you, your nominee gets the sum assured, which in our case is $1 million. So your nominee gets the sum assured. What happens if you don't die within 10 years? Nothing. Your premium is lost. Those premiums are the income for life insurance companies. In case of endowment based policies, what happens is these policies have two different components. First is the insurance component, just like we had in term life insurance, and the other is investment component or savings component. So these endowment based policies, what they do is after the term is over, let's say the term was 10 years or 20 years, you get your money back with certain amount of interest, and the interest is usually 5 to 10, it's not 10%, sorry, it's usually 5 to 6% annualized, which is far lower than what capital markets can give you. And this is the reason why these kinds of insurances are bad, because you neither get the insurance properly nor do you get the investment properly. The biggest problem, in my opinion, in these kinds of life insurance products is the sum assured or cover value. So let's say something happens to you, let's say you die, your sum assured won't be as high as it could be in term life insurance. As in, you'd have to pay way more premium in order to match the $1 million life insurance cover that you can have with the term life insurance. Also, for all your hard earned money that you have given to the life insurance company, you get 4 to 5% returns annualized. So you neither get proper insurance, nor do you get proper investment returns. This is the money which is getting wasted because it is not utilized properly, efficiently. When money is not invested efficiently, it's basically wasted. And let's admit, wasting money is bad for the economy, because our economy runs and grows on the money that is spent. And unlike what most people believe, the corporations and politicians, I don't know, there may be stupid politicians and corporations that want everyone to be poor, but if they're really smart, they wouldn't want you to be poor, because they want you to spend money. They don't want you to invest money, but they want you to have money and they want you to spend money, because that's the only way money is going to flow into their pockets, especially corporations. So when people say corporations don't want you to be rich, yeah, probably they don't want you to be rich, very rich. They don't care if you're rich or poor, but they want you to spend money. And you can't spend money if you don't have money. So they don't want you to not have money, but they definitely don't want you to be poor, okay? Yeah, let's not get caught up in this conversation for longer. So these corporations don't want you to be poor, as in they don't want you to not have money. They want you to have money and they want you to spend money. So when we are investing like idiots, when we use insurance, especially any kind of insurance, and use it as an investment vehicle, we're essentially wasting money and we're causing lots of damage to the economy in the longer run. I'll give you an example, and I'll give you an example of India. India's largest insurer is life insurance company is called Life Insurance Company of India, LIC of India. Its revenue last year was around $75 billion. Now, I don't know how much of that was from endowment-based policy renewals and first-time policy premiums. I don't know. But even if it's half that amount, that's $35 billion that could have been used more efficiently if invested in the capital markets. Remember, India is a very fast-growing country. So the returns that you can expect from a fast-growing economy like India is way more than what you can expect in the developed nations like China and United States and Singapore too. India is relatively fast. Actually, Singapore is also fast developing, but anyway, if this $35 billion is invested in the capital markets instead of being invested in life insurance corporation, which again indirectly invests in the equity markets, I think the result would be much better, because if people have more money, at the end of the day they are going to spend it. I know spending too much money is also a problem, but that can be controlled by the government using interest rates and all other tools that the central bank has. But if people don't have money at the first place, that is a problem. If people have wasted money, then that is a problem. And I think life insurance, especially in India, wastes a lot of money. I know there's less awareness, there's less education, and financial awareness in general is not prevalent anywhere in the world, I think. But in India, it's especially worse. It's very bad. And yeah, the youngsters and urban population knows about this. They're more aware than the rural counterpart, but I don't know. I think this is something that the government should take care of, because at the end of the day, when you think long term, it definitely has some impact on GDP and growth. I don't think it's as simple as the citizens are doing whatever the fuck they want to do, let them do whatever the fuck they want. It's not as simple as that. And I mean, Life Insurance Company of India is a government company, so they should expect, I mean, not expect, but I look up to it to bring a change, because if they play by the rules, if they don't think about the better of their own people, then I don't know who will. I don't know. $35 billion each year is a lot of money. If that money gets invested in fast growing capital markets, it can grow substantially and it can give substantial returns to investors, even if they're doing index or indices based investing. And we have a lot of indices. I don't know. The rural India needs to be awakened. People need to be more aware. People need to be taught about financial wisdom. I don't know, financial knowledge, financial education. There should be some kind of awareness and education regarding around this thing, this wasting of money in insurance based products. I don't have a direct solution how we, yeah, that's what I think. I don't know. Let me know what you think in the comments down below, and give this video a thumbs up or thumbs down depending on whether you liked it or not. Yeah, thanks for watching.